While you were listening to mainstream financial advice, the world's wealthiest investors made a move that should terrify every major bank on Wall Street. They're accumulating silver at a pace we haven't seen in decades, and they're doing it quietly, deliberately, while the financial media tells you precious metals are dead money. Here's what keeps me up at night. The same billionaires and family offices who called the 2008 crash, who positioned themselves before every major monetary shift, are now backing up the truck on physical silver. Meanwhile, retail investors are panic selling into weakness, handing over their positions at the worst possible moment. If you own silver, don't celebrate yet. If you don't own any, don't panic yet either. Because what I'm about to reveal is the exact playbook smart money is using right now. By the time the news catches on, the opportunity will have already passed. The insiders know something. Today, you will too. To understand why this matters right now, you need to see what's happened over the past 90 days. Silver prices have been hammered despite record industrial demand. The paper market screams weakness, while physical inventories are draining at an alarming rate. Retail sentiment has collapsed to multi-year lows, a classic sign of capitulation that sophisticated investors recognize immediately. But here's where it gets interesting. The Federal Reserve remains trapped between crushing inflation and triggering a recession. The BRICS nations are accelerating their de-dollarization agenda faster than anyone predicted. The solar and electric vehicle industries are consuming silver at unprecedented rates, while mining supply deficits widen for the fourth consecutive year. Now look at the players. Family offices and ultra-high net worth individuals are quietly accumulating. Eastern central banks are adding silver to their reserves, while Western institutions maintain massive short positions on the COMEX. The contrast couldn't be starker. Asian buyers are absorbing physical metal, while Western markets dump paper contracts. Retail investors follow mainstream narratives and sell. Institutional money reads the data and buys. This massive divergence between East and West, between paper and physical, between retail panic and insider accumulation, is creating a setup that demands your attention. Let me show you the numbers that reveal exactly what's happening behind the curtain. Start with institutional positioning. Recent filings show major hedge funds increasing their silver ETF allocations significantly. The average family office exposure to precious metals has jumped from 2% to 8% in just 18 months. Private vault storage demand in Singapore, Zurich, and Dubai has surged 40% year over year. Smart money isn't talking about silver, they are buying it. Now, let's examine the physical market. The registered silver inventory on the COMEX has fallen to historically dangerous levels. The price premium in Shanghai over the London spot price remains stubbornly high, signaling real-world shortage conditions that paper markets refuse to acknowledge. Dealer premiums on physical coins and bars stay sticky despite weakness in the spot price. When prices drop but premiums hold, that tells you physical demand is robust, regardless of what futures contracts suggest. Industrial consumption tells an even more compelling story. Solar panel manufacturing will consume a record amount of silver ounces this year. Electric vehicles require significantly more silver than traditional cars. The 5G build-out and AI data center expansion demand silver components at a massive scale. Even defense contractors are stockpiling strategic reserves. Meanwhile, supply simply cannot keep pace. Primary silver mine production has declined for 3 straight years. Major producers like Mexico and Peru face mounting political and regulatory headwinds. The all-in sustaining costs for miners now approach current spot prices, squeezing their margins to dangerous levels. Think of it like a concert where scalpers buy every single ticket, while the box office website claims there are plenty of seats still available. The disconnect between stated availability and actual supply is exactly what's happening in silver right now. The data doesn't lie. And smart money sees this clearly. So what does smart money actually do with this information? Their playbook operates in 3 distinct phases, and understanding each one reveals why this moment is so critical. Phase 1 is accumulation during despair. Wealthy investors buy precisely when sentiment hits rock bottom. They recognize retail capitulation as their entry signal, not a warning to run away. They never chase rising prices. Instead, they position themselves months or even years before the popular narrative shifts, dollar cost averaging into physical metal, and select mining stocks while everyone else is scared. Phase 2 involves strategic positioning. Smart money diversifies across physical bullion, allocated storage, and royalty and streaming companies. They deliberately avoid paper products vulnerable to counterparty risk, particularly unallocated accounts and certain ETFs with questionable backing. They lock in supply through direct relationships with refiners and private dealers, securing the metal before it becomes unavailable to the public. Phase 3 requires patience. These investors understand that monetary cycles operate over years, not quarters. They're positioning for a currency crisis, not next month's price target. History shows that silver often moves last among the precious metals, but it moves the fastest and furthest when it finally breaks out. Here's the critical mechanism you need to understand. The suppression of the paper market creates artificially low entry points for those who are paying attention. The pressure from a physical shortage builds invisibly beneath the surface. When the paper and physical markets diverge too far, a violent repricing becomes inevitable. The contrast is stark. Paper silver can be created infinitely through derivatives. Physical silver cannot be manufactured from nothing. Banks short paper contracts to control prices. Smart money buys physical metal to control the actual supply. Retail investors choose paper for convenience. Insiders choose physical for survival. The risks are completely asymmetric. Banks face the risk of a short squeeze. Paper holders face potential delivery failures or forced cash settlements. Physical holders simply wait for reality to overwhelm the manipulation. Smart money isn't predicting the future. They're just reading the present more accurately than everyone else. This story extends far beyond just silver. What we're witnessing reflects deepening fractures across the entire global financial system. Consider the monetary backdrop. Global debt has reached levels that mathematically guarantee currency debasement. Central banks remain trapped between persistent inflation and a looming recession, unable to solve one problem without worsening the other. Real interest rates are still negative across most developed economies, creating the ideal conditions for hard assets to outperform. At the same time, currency wars are accelerating. The BRICS nations are actively building their gold and silver reserves while engineering alternatives to the dollar's dominance. This de-dollarization creates entirely new centers of demand that operate outside of Western institutional control. China and Russia are stockpiling strategic metals, including silver, as a form of geopolitical insurance. Bond markets are flashing warning signals that sophisticated investors simply cannot ignore. Sovereign debt is selling off globally, while traditional safe haven assets are failing to deliver protection. Smart money is rotating out of bonds and into tangible assets at an increasing pace. And the energy transition adds a whole other dimension. Green energy mandates will require billions of ounces of silver over the coming decades. Industrial demand is becoming structurally higher, not just cyclical. Silver isn't just a trade anymore, it represents a bet against the long-term sustainability of the current financial system. Smart money sees cracks forming throughout the entire foundation. The wealth transfer from west to east, from paper to physical, and from the unprepared to the positioned is already underway. Most people simply haven't noticed yet. While you watch this, billionaires and central banks are quietly buying silver at a pace we haven't seen in decades. They're not announcing it on the financial news. They're not tweeting about it. They are simply accumulating, positioning themselves for what they see coming. And here's what should concern you. They know something most retail investors don't. The smart money has already made its move. The question now is whether you will recognize this window of opportunity before it closes completely. Today, I've pulled back the curtain on the insider playbook. We examined exactly what institutional buyers are seeing in the silver market right now. The supply deficits that are impossible to ignore, the industrial demand explosion that mainstream analysts keep underestimating, and the manipulation patterns that have created an artificial buying opportunity. By the time this information hits the mainstream media, the opportunity will already be priced in. The insiders aren't waiting for validation. Neither should you. What you've learned today could fundamentally change how you view silver and your entire portfolio. This video is for educational purposes only and is not financial advice. Always do your own research before making any investment decisions. Thanks for watching, and be sure to subscribe for more insights.